All right, guys, welcome back to another midweek market recap. It is March the 18th, 2021. And Jerome Powell came out yesterday with the statement that they will not be hiking interest rates until 2023. And this is how the market actually react. The 10-year Treasury yield is just going up, up, and up. And what is happening is, as I explained, there is a perceived, whether it's genuine or just a perceived notion, and the confidence in the American market is a debate for another video. However, what it typically means is that money is flown out of the debt market and is going into riskier stocks. Not only that, but it's flown out of the tech stock and it is going into the financial sector itself. So I'll cover those quick two bases right now, but you need to follow this particular gentleman. His name is Christopher Cole. He's one of the fintech rock stars, so I highly recommend that you do follow him because he knows what he's doing. Pretty much the bond market volatility is telling us that the Fed is suppressing credit volume to support risky companies at the expense of rapid rise in US Treasury volume. Again, that is so true. Money is flowing into riskier stocks simply because people are perceiving, whether it's genuine or not, that there is confidence in their market. The other thing is that the money is flown out of the tech stocks and again flowing into the financial sector. And as you can see with the Nasdaq, it rose. It looks like it was going to retest the resistance here. And of course, we are going to expect to go down. Pretty much what's going to happen, the Fed will only generally start stepping in if one of the financial systems breaks down. And it looks like the tech stocks, the Nasdaq, the S&P 500, and the Russell is pretty much going to be the sacrificial lamb, so to speak. So if that financial instrument crashes down, then the Fed will start introducing rate cuts and start introducing your yield curve controls. But right now, they're just stepping back. They are prepared to watch and wait and see if one of the instruments is actually going to fail. But you also got to remember that there's another underplay. You've got the COVID-19 relief bill coming into place. There was that 1.9 trillion US dollars that's going to be pumped into the system itself. And there's a play that type of money could potentially go into the tech stock as well, just to help prop that up. So these are the moving parts that are coming into play. But there's also another trade-off if we have a look at, the gold. As I explained in my previous video, that there is an inverse correlation between the US 10-year Treasury yield and that's to gold. So this is why you're seeing gold being pumped down. However, if the Fed start introducing yield curve control, then you'll start seeing the gold start to correlate with the US 10-year yield. So just watch out for that. Of course, the US crude oil is taking a little bit of a pressure downwards. However, I'm expecting that a little bit, but ultimately oil is going to go up. They will prop up oil and oil is going to continuously rise. If we go back to the Bank of England, they're taking a very similar approach today, what the Fed said yesterday, and they will not be also hiking interest rates through to 2023. So they're also taking the same stance and also taking the same bullish, the same dovish tone. So the UK economy, the FTSE 100, seems to have reacted fairly well to the news, and it is actually doing fairly good over the course from the start of the pandemic upwards. So their economy is starting to recover a bit, so I can see a bit of confidence happening there. If we have a look at crypto, what is the news of the day in crypto? And we can see that Visa plans to enable Bitcoin payments at 70 million merchants. That is massive. That is massive adoption for Bitcoin. So I can only see Bitcoin rising up. It has taken a bit of a dive over the weekend. If we scroll back out here, it took a bit of a dive over the weekend, but I'm looking that it's playing into this rising wedge. So I'm a little bit worried about this rising wedge. But I mean, if you're looking at adoption like this, then technical analysis just goes out the window. It's all about adoption at that point. The other bit of news is due to the sale of one of the NFTs. I think it was like 61 million. Correct me if I'm wrong here. Let me just have a look here. Yeah. The pieces such as Beebles Everyday. I mean, this is a record-breaking $70 million that happened during the course of the week. Now, what is coming out of that? Obviously, not many people are going to have $70 million lying around, and a lot of these NFTs are starting to become a bit pricey. So there's a new thing that's coming out, which is called fractionalized NFT projects itself. So that's gathering steam. This weekend's video, I'm actually going to be doing a top 10 NFT marketplace where you can go and purchase some NFTs. So just look out for that. But yeah, this was just a very quick overview of what is happening in the market. So again, just pay attention to what is going on in the 10-year Treasury yield and how that is affecting the Nasdaq, the tech stocks, as well as affecting gold. So just watch for those players. Anyway, that's my recap. I hope you enjoyed the video. Peace out.